Hi, welcome to the Market Alert for Thursday, the 2nd of December 2021. So stocks, bonds, yields extend plunge after Omicron hits US headline. 30-year yields are at the lowest since January. Transitory inflation is consigned to death and resting in peace, according to this headline. In just a few days, the market was treated to two big shocks from Powell, and obviously that was he was going to increase tapering, and also that he had admitted that inflation was transitory. There is a third, actually. In April of this year, he also admitted that the US debt was unsustainable. So there are three you can add in there. US manufacturing slumps to weakest since 2020 as cost inflation hits record high. And finally, as we're heading into the non-farm payrolls this week, tomorrow, that will be at 1:30. The ADP signals modest slowdown in job gains in November, despite easiest labour market ever, i.e. there are plenty of jobs available, but US workers not taking them. So interesting. While I'm here, gold-silver ratio, as I said earlier in the week, would go to 80, and we can see that is the case. So we'll just switch this to a daily chart and do that. You can see that we're in the range there. We've actually hit 80 ounces of silver to 1 ounce of gold. It could go a lot higher yet, and there's two reasons for that. We're in the December delivery, the September, December, March, July for the futures contracts where delivery, and if you go back and look at the charts, I haven't got time to do it this morning, but if you have a look at a daily chart and those months, you will see that they slammed the price of silver. It's the banker's prerogative. It allows them to actually buy it cheaper than for the delivery of those who are actually taking delivery of the silver in those quarterly months. Okay, so let's have a look at the Dow, see what it did during yesterday. As the headline indicated there, that we got another sell-off, and that was because of the Omicron virus making its way to the US. You can see that we went through the 89% retracement and sailed through the 200 MA there. We've got the low of yesterday to take out, which is highlighted, and then these two here as well, which whilst I'm programming at the moment is to have the numbers actually printed at the end of these, if possible, so that we can see automatically where those support levels will be. You can see that we're getting a lot of volume now in the daily chart as well, but we've also got divergence at the moment in the stochastics. We've got obviously a sharp decline in price, but the momentum is starting to pull up a bit here as we head towards the lows to the left. Wouldn't be at all surprised to see the market test this level. In the 30-minute chart for yesterday, you can see exactly what happened. Here we actually had a divergence on the upside as the Dow opened and traded higher. This is at 4:30 p.m. and then the first case of Omicron was announced, and this sent the market straight through the daily pivot, through the 200, through the 50, all the way down. And let's just have a look, get a ballpark figure from the high down to the low. The market dropped 1,054 points there. So a big move on the news. 360 million people in America, one positive case released by the media, and the market drops 1,050 points. Yes, it's a mad world, isn't it? It's a mad world. When you get really good news and inflation, they won't move the price of silver to the upside, but they'll certainly slam the stock market. So the DAX still holding at the 89 retracement at the moment. Yesterday the market attempting to move higher and then was slammed back, stuck in a sideways range, and then following the the Dow at the moment, with prices closing or trading above the 5-bar moving average at the moment. Nothing's changed on the upside of targets where the market could move to. Should it be allowed to move back to the upside? It's got more chance of being allowed to move to the upside than being slammed to the downside, hasn't it? Given the pattern of manipulation over the last 13 years or more. In the 30-minute DAX, again, you can see the prices recovering yesterday. Let me just check that these times are correct. Yeah, that's right. So we saw the market moving higher in the DAX yesterday. You can see all of the parabolic to the upside apart from the odd bar, but then the markets are turning around and moving back up. And then again in the afternoon, as soon as we got to 5 p.m, following on what happened in the US, the DAX gave up all of the gains and some, and moved back, but at the moment it is now moving to the upside. You've got a huge demand here. You can see them buying back in at this level, and if I just draw in from this low to the left to the high before 4:30, you will see that that is 89% as well. Oversold demand, and the market then switching momentum and moving back to the upside. A predictable pattern. You'll see it all of the time, how this works, no matter what the time frame. And let's just have a quick look overnight in the 2-minute chart, see where we are, get a bit more detail on what's happening. Just over to here a bit so we can see. Well, let's just go back a bit further, have a look at yesterday afternoon. It was really quiet actually, because Powell was speaking in the afternoon along with Yellen. Started out really quiet, then managed a bit of a move and then sideways. They spoke for some time about the CARE Act, and then the market moved higher, and then we made our descent, as you can see there, as the market oscillated all the way down throughout the early part of the evening, and continuing on and accelerating to the downside when the Dow sold off 1,000 points. And again, you can see the climatic action here. We're oversold. We've got the volume there, and then we get a retest there. It's just 89%, and the market starts to move back. So that's what happened inside of the 30-minute chart there. And interestingly enough, let me just draw this in for you. From this low to this high, and I'll just drag these across, and you'll see again 89%, and more or less a double bottom there, not quite, and again you'll see the stochastics coming back from this level. So you've got again a sort of a divergence, not quite, but that again, that climatic volume there, if you have a look at the 30-minute charts, which is here, that volume bar there, that one there, which is oversold, is here. That's inside of it, and you can see it took place over several minutes while they bought back the market. So you can use the inside of the 2-minute to trade your timing inside of a 30-minute if you wanted to do that. Again, all of these new things that I'm showing you can be applied in any time frame, and then you can use different time frames to take advantage and reduce the risk. So let's have a look at silver. Well, as I said at the beginning of the week, they're going to hammer this, and they haven't finished. They haven't finished, and I'm afraid this is going to go on for a month, because we're in the delivery month, and delivery months, like I say, September, December, March, July, are months. If you go back and look, will be show you that silver is hammered to the downside. So expect this to take out this low here that we have to the left, and also this one as well, which is a low that was put in back in October, which you can see there. I'm going to have to switch up to the weekly chart or a monthly chart of this. I've only got a monthly chart, so you can see there. We've got this 21.68. For me, we're going down to below $20 now, which is a bit galling, but you'll see, if I can just get this into the window, I've had an order in since the 26th of November. This is in at 21, just below 21.50. I'm going to move this because I can see that we're going to go straight through this area here and also through here. They're going to use this uncertainty. We've got the non-farm payrolls tomorrow. We've also had the ADP numbers, wherever they were. Did I? Yeah, there we go. Easiest labour market, modest slowdown. Well, if tomorrow's figures, I haven't done the news yet actually, which I'll come back to that before we conclude. If we go to tomorrow, all we need to do is to have a number less than 553,000 jobs, and then we'll see silver hammered, absolutely pummeled to the downside, because they'll use that and say, well, there's no inflation, there's no pressure in the economy anymore. And with the Omicron variant, if you can get one case can move the Dow down 1,000 points, then I dread to think what happens when they start putting out the BS that they've got hundreds of thousands of cases. So the silver is going to be hammered, and that's why in the monthly chart I have these areas here where we could come down to. This would be the area for me down at the $19 area. Certainly short at the moment in the monthly chart, so we've gone red. So that's why I've been bearish for some time on silver. I'm still holding my positions that I bought in down here, and will continue to do so. And I don't care if the market comes back and takes me out and goes all the way back down to here, because I will hit it hard with a bigger bet per point, knowing full well that we will at some point get what we want when JP Morgan switches sides, and then it will be vertical and end up making more money anyway. So I don't mind in the least whatever they want to do. We know what they're up to. We know the tricks. We know the price is 60% cheaper than it was in 1979. I know I keep going on about it because I can't get my head around the fact that we have a commodity, the only commodity in the world that is 60% cheaper than it was in 1979 and 2011. I mean, if that isn't blatant manipulation, then I don't know what is. So I'm going to take advantage of it, because at some point the traders, the banks, and every man and his dog that's in investment will know that the only thing that is so cheap that it shouldn't be cheap will pile in, and then they will send the market vertical. But not until the crooks allow it to be the case. But there we go. So I've had a bit of a bounce in the 30 minutes. We're oversold at the moment, and that's why we're starting to see it move back a bit. Close. We'll take out the low at 1 o'clock. Don't forget the LBMA London fix, 1 p.m. every day without fail. 9 times out of 10, send the market lower. I just wish there was a way without a wide spread of actually taking advantage of that, because every day you could actually guarantee more or less to make money after 1:30, and then 2:30 they do it again when the Dow starts moving. The cash Dow actually opens. If you don't believe me, go back and have a look. The dollar sideways yesterday. Of course, they're trying to pump this back as well. It's inversely related to the metals market, so obviously they're going to use this as much as they can. We've got a bit of a move going to the upside. So look at the 30-minute on the dollar, and it's moving up. No great shakes there, of course, but we'll see what happens later as we get towards that 1 p.m. London fix. Okay, let's have a quick... while I'm thinking about it, let's just have a look at gold. And you'll see gold is holding at the 89% retracement. And that's why you're getting the 80 in the gold-silver ratio, because gold is holding and silver is being hammered for its short delivery at the end of December. So it all makes perfect sense there. Again, if you just look here, you can see September, December. March, we had a bit of it was allowed to actually move a bit in March. No, actually, because as you get towards the end of the delivery, there you go. There's the 1st of March. This is a weekly chart. So there you go. You can see this even in here, because obviously this gold-silver ratio has gone up. Then you've got September, so they hammered the price of silver. Then you can just see it from here, and then December. It makes perfect sense. And last September, you can see it there. So there you go. There's all the proof you need to actually see that. But on the daily, you can see that we've moved up sharply. Mentioned this at the beginning of the week. We go back to 80. We've gone back to, more or less, gone back to 80 at the moment. Okay, quick look at today's news. Have we got the criminal out today, or is she out tomorrow? No, the ECB is tomorrow. We've got Spanish unemployment today, OPEC meeting today. We had the crude oil inventories yesterday. Actually, I forgot to have a look at those when they were released. Let's just have a quick look. Also, we've got a shortage in crude again of minus 900,000 barrels. So that will assist with inflation, of course, showing demand. But back to today, what have we got? not a lot. Oh, Yellen's out again at 2 p.m. before the Dow opens. See what she's got to say. But she, like I say, she's been downgraded. I could think of far better things that she should be downgraded to, but let's not get personal, as it were. Okay, that will do it for today. Let's see what happens at 1 p.m. for silver and whether the market can maintain its move back off those 89% retracements in the daily charts. Okay, as ever, thanks for watching. See you in the next one.